China is bailing out the country's heavily indebted local governments, relying on trusted methods to keep its financial system stable despite promises to allow market forces to play a greater role. But how much was this caused by the nation's so-called property bubble? Joining me down the line is Patrick Chovanec, Chief Strategist at Silvercrest Asset Management. Patrick, Beijing is permitting provinces to issue at least 2.6 trillion yuan, around $419 billion in bonds this year to stave off a debt crunch, with reports suggesting that local administrations have accumulated some 18 trillion yuan in bank loans and bonds to fund risky land and property deals, equivalent to a third of China's economy. This sounds dramatic. Is it as bad as it sounds?
Yes, it is as bad as it sounds. It's interesting that you begin the conversation linking the local government debt problems in China with the property market, because that is a link that a lot of people have not seen until now, and it's a very strong one. China's local governments depend on land sales to finance a great deal of not just the massive debt that they've taken out, but also just their operating expenses. And so they're reliant on a continuing property boom. And that property boom has really buckled in the past year or so. Property market's seen a significant downturn. So that puts a lot of pressure on local governments, their ability to finance their current operations, much less repay their debt.
And as China's real estate market slows, state-owned banks that did much of the lending, as you said, are on the hook. What does this mean for the country's economy?
The property market in China plays an important role for two reasons. First of all, because it generates about 10% of GDP directly, and also probably about double that if you include all the industries that feed into the property sector and construction. Property as an asset underwrites almost all lending in China. Chinese banks lend on the basis of collateral. It's true really throughout the entire economy. All business loans in China are really based on property as collateral. And if that property takes a hit in terms of its value, that really calls into question the basis for almost all the loans in China's banking system.
So how exposed are China's banks to the property market now?
They're quite exposed. That exposure looks a lot different from, say, the subprime crisis in the United States. A lot of people will say, oh, people in China don't take out many mortgages, they have a lot of money down, or they may pay cash for property, or China doesn't securitize and then sell that debt, although increasingly it has been doing that. It's not just lending to property developers, which is significant, but it's also lending to local governments, which have used property as collateral and the income from property as collateral for repaying debt, and then also lending to businesses, which use property as collateral. So exposure to the property market is pervasive throughout the Chinese banking system and probably will lead to very sizable losses.
China's real estate market is a unique one. In 2008, you actually introduced the idea that Chinese savers have been stockpiling multiple residential units and willingly leaving them vacant as a store of value similar to gold. Why was this done?
First of all, they didn't have a lot of alternatives. The stock market at the time didn't look very good, although a lot of people are piling into the stock market now, but a lot of people saw stock market investing as risky. People in China cannot invest abroad freely. So really it was one of the few attractive options available to them, aggravated by the fact that you had the Chinese government, Chinese central bank, pouring in a huge amount of stimulus money into the Chinese economy. The money supply exploded threefold over the course of a few years. And so if people are using property as a place to stash their cash, and they have that much more cash to stash, you were going to see an explosion in real estate investing, and that's exactly what you saw, but it was on very shaky foundations.
And now what position has this left China in?
You have a lot of properties that people bought that are not necessarily suited to the end-use market. There's 1.3 billion people in China who want a place to live and work, so there is real demand there. But there was a big mismatch between what the market was providing at very, very high price levels for investors and what the market needed to provide for people at much more affordable price levels for them to actually use.
Something is confusing me about this principle of stockpiling property, though, because in China, buildings are built not like in the West, which will be up for hundreds of years. Chinese buildings are almost sort of short-term residences. After 10, 15 years, they're quite old and sometimes get knocked down to be built again. Is this not an issue?
It is an issue, but it's not one that people think a lot about, because China's property market, let's remember, is very new. It only began in the 1990s. It's a new asset. A lot of people don't have experience with property depreciating in value because of maintenance and other things. And so they assume that it will retain its value or actually increase in value. Like a lot of bubbles are based on a new kind of asset class that people have only seen the upside from and never seen the downside.
We're now seeing the repercussions of China's state-inspired lending boom in response to the global financial crisis. Do you think government bonds are the best way to handle this situation?
It is potentially better if they're actually responsible for repaying those bonds. But nobody really believes that they are, because ultimately local governments and provincial governments don't have any real independence, either in terms of their balance sheets or in terms of their ability to raise revenue. Ultimately, people assume that the responsibility lies with the central government. And they're probably right in that respect. The issue with creating a Chinese bond market, whether it's local government bond market or whether it's corporate bond market, is accountability, connecting risk with return.
This really has murmurings of the public bailout of China's state-owned banks in the 1990s, where only around a fifth of the debt was recovered. Will we see something similar now, do you think?
A lot of these banks, unlike in the 1990s, are publicly listed. So what happens to them? I mean, in 1990s, Chinese banks were basically, the equity was completely wiped away from one branch of government to another. And it didn't matter because it was still the government. But in this case, it would be potentially private shareholders affected by this. The second thing that's different now is that you have a shadow banking system that has been created just in the past couple of years in China. And so you have part of the balance sheet of Chinese banks are on balance sheet, and you can see them. And part of it is off balance sheet, taking place through investment vehicles and things that supposedly investors are responsible for if there are losses, but in reality, the banks or the government may be responsible for. This really complicates any kind of a bailout.
Finally, what do you see happening to China's property market in the future?
I think you're going to see a correction, both in terms of prices and in terms of how much construction takes place over the next few years. Although it will ultimately be healthy for the Chinese economy, it's going to be very disruptive to anyone who invested in property or who is basing their projections of what's going to happen in the Chinese economy on the continuation of an unsustainable construction boom.
And the ghost towns built and left empty, what will happen to them?
Some of them will eventually be filled up, maybe not at a profit. Maybe they'll be filled up with investors and property companies and banks taking very serious losses. Or maybe they may remain empty and kind of a monument to what happens when you build things without any kind of reference to who the end user is going to be.